Hello, welcome to European Open Briefing for Tuesday, September the 4th. I'm Rafi Boyajan, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. We're seeing some easing in the risk-off sentiment this morning. Though we do still have a lot of risks ahead, mainly that September the 6th deadline when President Trump will have to decide on the next round of tariffs on Chinese imports. We also have the ongoing uncertainty regarding NAFTA renegotiations. But nevertheless, we did see Asian stocks turning positive late in Asian trading, perhaps helped by a stronger yuan fixing this morning. The dollar index, though, is benefiting still from safe haven demand. It's risen to 1.5-week high. The yen and the Swiss franc, though, are a little bit softer this morning. Emerging market currencies, on the other hand, are still under heavy downside pressure, though not as much as yesterday. The Turkish lira has steadied a little bit after the country's central bank signaled a possible rate hike in the near future. The Argentine peso is also at the moment appearing to have halted its slide. But if you look at European currencies, the euro and the pound are struggling against the US dollar. We did see weak manufacturing PMIs coming out of the Eurozone and the UK yesterday. Sterling, of course, is also being weighed by that Brexit uncertainty after Michel Barnier, the EU's chief Brexit negotiator, said that the EU is strongly opposed to Theresa May's Brexit plan. And we've also seen strong criticism within Theresa May's own party against that customs partnership plan. If you look at the Canadian dollar, it's also struggling against the greenback. It's fallen to 2.5-week low as investors await for the resumption of those trade talks between the US and Canada tomorrow. The Australian dollar had risen earlier in the day. It's now fallen by 0.5% against the US dollar. The RBA meeting temporarily boosted the Australian currency as they sounded a somewhat more upbeat tone than had been anticipated. Taking a look at commodities, gold prices have reversed lower as the US dollar has started to head higher this morning. But oil prices, they're up 1%, more than 1% WTI crude, benefiting from the closure of oil platforms on the US East Coast as we now get underway into the hurricane season. So we could see more disruption to US output. Brent crude, though, is marginally weaker this morning. And looking at the main performers, oil is up there at the top of the table, followed by dollar, Swiss franc, reversing some of its early losses this week. USD CAD also up strongly, but at the bottom of the table we've got the Kiwi and Aussie pairs, which although they were up earlier this morning, they seem to have quickly deteriorated heading into the European Open. Looking now at the dollar index, we can see that the dollar index has recovered substantially since the end of August as it benefits from safe haven demand, mainly due to risks surrounding that September 6th deadline when President Trump will decide and has signaled that he will probably press ahead with that next round of tariffs worth up to $200 billion on Chinese imports. We also have, of course, uncertainty regarding what's going to happen to NAFTA, with President Trump once again saying that he may go ahead with it without Canada, and he has also warned Congress not to interfere in those talks. The dollar index has now risen to 1.5-week highs around 95.41 this morning, and even dollar yen doing rather well this morning, recovering well above the 111 level. We could see, though, the focus later this week or later today, even going back to economic data. We've got the ISM manufacturing PMI coming up later in the once the US markets reopen, and of course we've got the non-farm payrolls report on Friday. Looking now at the Australian dollar, the RBA did hold interest rates unchanged as was expected, though they maintained their optimistic outlook on the Australian economy, which Some had been expecting perhaps a bit more dovish shift by the RBA, given a slowdown in Australia's housing market as well as the increasing trade risks. Though despite the upbeat tone, the RBA has signaled that it's not going to start raising rates until it sees a stronger pickup in inflation and wage growth. Although earlier the Aussie had recovered to above the 0.72 level, it's now fallen back below that key level. The focus now will be on second quarter GDP numbers coming up on Wednesday. And a quick look at emerging market currencies. We can see the Turkish lira a little bit steadier after the country central bank yesterday hinted that it's looking at several measures which could perhaps also include an interest rate increase. So that did provide the lira some support. We can see those record lows for the lira in mid-August, and after a brief recovery, it has in of the past week or so heading back towards those lows. If you look at the Argentine peso in green in the chart here, it hit a record high on a Friday. It is off those record low. It is off those lows, but it's still in risk, given that investors appear to have lost complete confidence in the country's government in managing the economy, especially after the president requested from the IMF to speed up a loan to the country. We can see the peso currently trading around 37.75 to the US dollar, and we're seeing a bit of contagion. The South African rand, Brazilian real, Indonesian rupiah, and Russian ruble have all suffered sharp losses in recent weeks, and that volatility could continue should the Fed continue to raise interest rates and we don't see any improvement in the trade tensions between the US and China. And looking at what's coming up later in the day, we've got UK construction PMI coming up, Eurozone producer prices. After the US, the focus will be on the ISM manufacturing PMI. We also have the global dairy auction due later on as well. Plus, we've got the speech by RBA Governor Philip Lowe. Mark Carney will be testifying before Parliament in the UK, and there's also going to be a speech by Chicago Fed President. That's it from me. Thank you very much for watching, and have a great day.